Hey everyone, welcome back to Fiscal Voyage. My name is Felix, and today's video we're going to talk about Amazon. Amazon had earnings reported on Friday, and you can see here they beat earnings by 23 cents, and revenue they missed it by 760 million. So they didn't hit um, revenue. So that's what part of the reason what caused the stock to crash. You can see here it was down 8% on Friday, so it lost $16.17. And we're gonna see if it's actually a good time to buy shares. I think it's not, and I want to show you why. So first off, we're gonna go to fast graph here, and we have here earnings yield of only 2.32, which is very low. I like to see earnings yields of 6.5 and higher. When I like to purchase company. Also, they don't pay a dividend, so that's okay. This is more a growth stock, and they have an S&P credit rating of AA, which is great. It's a good credit rating. And a long-term debt to capital of 36.36%. So that's all good. Everything looks good besides the earnings yield of 2.32. We don't want to use normal PE because you can see here normal PE is based on the for example, in this setting I have 13 years, so normal PE is 176. So obviously we're not going to use that. I think if I shorten the time period, the normal PE would be more realistic, around 52 times earning. But I actually don't think it should be a 52 times earning because we should be using more or less a 30 times earning, because you can see here they're expecting earnings growth of 28% in 2025 and 28% in 2026. So the company still continue to grow earnings, but I think this should be a normal multiple around 30. So we use our calculator out here. So we do, for example, they're estimating $4.60 for 2024. So if we do $4.60 times 30, this gives us a price around 138. So we'll say around 140. 140 should be, based on this information, what I think the earning multiple should be. So 140 should be the fair price for this stock. And I own shares of Amazon, and I'm up pretty nicely with it. I do plan to buy more shares, hopefully in that 140 or lower range. And I'll show you why technically I think that's a good area to add more shares for my portfolio. But first, let's continue with this here. So you can see earnings is expected to grow, and we go to forecasting. You can see here earnings expected to grow. There's about 60 analysts reviewing Amazon, so that's great. Long-term growth continue to grow, but you can see how it's overvalued. If we were to go to a multiple of 30, we could have lackluster return. In 2025 it could be negative 20% total return, until it starts to 2027, 2028 is when we start seeing good return. So we may have to go a few years of flat return or negative return before it starts picking up. This is why valuation matters. And so that's why I'm personally waiting for it to drop more. I own shares around $90, and I don't mind averaging up around 140 and adding more at 140 or 130. And I'll show you technically. The analyst scorecard, is pretty inaccurate, so we can't really count on this, but more or less it should be in this range, right? And we go to operating cash flow. As the company looks like they're they're doing well. Projection and operating cash flow, free cash flow. I don't think. Oh yeah, they had some negative free cash flow. So free cash flow is looking good. So that's all great. So this is why I want to buy more shares, just not at this price. So now if we go to the if you go back here again, you can see revenue. It missed expectation, but it was actually still up year over year. 10.2%. That's great. That's great. And the only reason why the stock dropped was the expectation and the fact that it was extended. If we look at the chart shortly, in a few minutes, you'll see how extended the chart was. And you can see here the North America segment sales increased 9% year over year. International segment increased. So that's all looking good. Maybe just not as high as what the analysts were expecting, but overall still good. And if we go to the technical chart, you can see here on the monthly chart right over here, you can see, it went from $80 basically to $200, pretty quick. It only had this little pullback, and then from there straight back up, dance around a little bit here and then higher to 200. But now we're having a pullback. That's all. So no big deal. That's a normal healthy thing before it goes higher. But this is why I think the $140 area is pretty good. You can see the monthly 50 moving average right here around the 150 to 140 area. And if we put this here, there's strong support at this area. You can see here there's resistance here and resistance here. This is right at that 150 to 140 area. So this is why I'm waiting for this area to hit. Then I'll be interested in adding more shares, maybe like 2 or 3 grand worth of shares around this level, and then just wait and see in case it breaks. And then the next level will be around here, 120 to 110, because of this big bottoming tail here. This drove the stock price higher. So this is where I'm actually interested in buying more shares of Amazon. So if we go to the weekly, you can see here how it's coincides with the weekly chart. So this is the weekly chart, and you can see it's right at the 200 moving average. So we got the 200 moving average in the weekly and the 50 moving average on the monthly. So this is why I say it's a great area. And you can see how it respected the 50 moving average on the weekly, and it did a nice little bounce. So it could bounce here, but then I'm hopefully, with all the recession talk and things like that, brings the stock price lower. One thing I don't like here on the daily chart, you can see it had a nice bottoming tail. It dropped all the way down to 160, and then it came right back up. So it looks like it may want to close this gap and then head lower. We'll see how that goes, because you can see here it had a big gap here on what day is this, on April 25th, and it had a gap down, and then it closed higher, and then it just went higher, right? But now it could be the same thing there. Hopefully not. The stock is, in my opinion, still overvalued. This is kind of where I would expect to be fair value, around the $140 to $150 is where I would be interested in buying more shares. We saw the fast graph. I think it deserves a PE of at least 30, or at the most 30. The lower the better. And based on technical, this is what I like, around that 140 area here on the weekly, and on the monthly it looks like a perfect area to buy shares. You have strong support in that 140 to 150 area. So that's basically it. So that's what's my idea with Amazon. I don't plan on buying any shares right now. I'm just waiting to see if it drops lower. Again, fast graph, it looks great. Earnings are expected to grow around 28% in the next few years. So I think it deserves a fair multiple around 30, not 43 at the current rate. And you can see here only earnings yield of 2.32, which is very, very low. I like to see it 6.5 and higher. So that's it. That's my thoughts on Amazon. I own shares, and I plan on buying more shares of this. I use the company, for most of my purchases online. So, if you use a company and they're public, you should invest in them, right? That's what I like to do. But anyway, thank you for watching the video. If you're new to the channel, make sure you hit that subscribe button. And also, if you enjoyed the video, make sure to hit that like button. I'll see you guys in the next one.